Hey guys, welcome back to the channel for the weekly options update. And if you're new here, I go over all my weekly trades once a week, once a week on Wednesday, which cover the previous Wednesdays through the day close of Tuesday. And I upload that video every Wednesday for your viewing enjoyment. And on weekends, I typically do ETF reviews, some of my own income strategies. You know, as you can notice, the title of this channel is called Retire with Less, and that is the goal. So check out some of the other Saturday videos that I put out that really align with my thinking. Also, I'll talk about no, let's get into it. Down in the pinned comment, ways you can support the channel: like, share, subscribe, do all that good stuff. In the beginning of all these Wednesday option videos, I go over any changes in my long positions. So if you look down here, usually I'll have long positions. Actually, I need to hide this one because that's no longer I'll just delete it. That was part of a video example. This one too is not Viatris. I'm looking to buy leaps into Viatris, but these are usually ones that I hold long position in, and I go over those first, and if there's changes, right? And then I go in and go to the cash secured puts that are mostly sold in Interactive Brokers, and I go over each position and profit and loss there. So this week, there's not much changes in the long portfolio. So no changes to Rocket, no changes to SoFi, no changes to Vizio. There is one change. I was able to get out of a stock that I should have never got into in the first place. You know, it seems like every time that I, walk away from my guidelines that I set, right? What I like to see when I put on a cash secured put, every time I walk away from that, I always kind of get in trouble, right? And if you want to know what those guidelines are, I did a video on that. I'll link it up here. It's probably on a thumbnail right above here, but I'll link it up top down below. So what do I mean when I got out of the guidelines? Well, I looked at CVM back on June 24th, and I didn't look at a chart, didn't look at any news, didn't look at if it had earnings. I didn't look at anything. I saw the price of the stock was 21 bucks, and I saw at a $10 strike you can get 33 cents a piece. So I thought, man, that's well over 50% drop. Can it get there? I was like, that's highly unlikely, right? And so I sold 3 contracts. I thought it'd be, an easy 100 bucks. Well, what I didn't know was CVM was there was a FDA decision that was coming down the pipe very soon, and once that came out and it was not favorable, it quickly sank the stock, and it went from $21 all the way down to close to, it was under 7. No, maybe it was under 7 for a minute. And so I had to end up buying 300 shares at 10 bucks a pop. So that's what happens when you don't really, this is chasing premium is what this is. Okay. And it was a mistake, and luckily I was able to get out of it without much harm. It started creeping back up here in August. I had sold 3 calls for a $9 strike just to try to get out of it, made some profit there. And then I sold another 3 calls at a $10 strike for September 17th. Well, it recently started spiking up, and on Friday, 8/27, I was just doing some math, and I said, you know what, I can get out of these calls and sell these shares and make a little money and not look back. So that's what I did. I took a loss on the covered calls of $241.28. And then I sold all the stock, 300 shares at $10.84. So Overall, stock profit was $252, but I lost $56.75 overall in all the puts and calls, a premium collected from the stock. So total profit $195.25 on a trade that I probably should have never went into in the first place. So lucky to see CVM gone. Next one is Wish. I got a signed Wish at $9. Right now it's selling at $7.21. And I did sell one call because I only have 100 shares, 31 cents to September 24th at a $9 strike. Collected $31 on that one. So we're just waiting to see how that's going to work out in September. So that's it. That's it for the long positions, any changes anyway. And let's go over to the regular options. This here shows the options contracts closest to expiration. So this will give you a quick eyeball look on if you have something that's in the money. So right now I have one contract on AXL at a $9 strike that's currently in the money. It's trading at $8.87, but I have 17 days left. So I have nothing in the next 2 weeks. I don't have anything until September 17th that's ready to expire. So as some of you guys know, I like to trade long DTEs. When I say long, 45, 40 to 50 days is really where I like to be. And that way it reduces volatility. You typically don't, what I've experienced is you typically don't have the oh crap moments. You have things that you can manage, right? It's not high stress. So we'll go over here and we'll look at options closed. And I only closed out a few. Closed out ARC G. I also removed, it was a suggestion from a viewer, the fees column, because the exit price and the fees column were right next to each other and it looked funny. And to me, to be honest with you, because the profit and loss over here is including fees, so in my opinion, fees are irrelevant anyway. So we got ARC G. I closed that at 40 cents. Made $104.59 in 26 days on that one, just for one contract. The overstock.com, I had two contracts on that, closed it for 20 cents, made $98.85 in 28 days. Now here's the CVM calls. Closed those for $1.25 a piece, so lost $239.73 in 11 days on that one. IWM had one contract there, closed it for 28 cents, made $129 in 28 days. Penn National Gaming had a 60 strike on that one, closed that one for 24 cents, made $99.49 in 15 days. TAN ETF, that's the Invesco Solar ETF, closed that one out for 14 cents. Yes, 14 cents, made $83.84 in 25 days. And then American Airlines, I bought those back today, two contracts at 19 cents a piece, profited $62.85 in 35 days. So not much closed, but I did open a bunch, so let's sort that out. So we go from 8.25, and there's that covered call on Wish, one contract for 31 cents or $31, whatever you want to call it. Went back into CMA, which is Comerica, it's a bank. 62.50 strike, 58-cent premium, did two contracts there for $116. That was a 50-dayer. I think it was 52 when I put it on, something like that. Corsair Gaming. This is part of a strangle. Whoops, I got on here call. That should be a put. Corsair, that's what I was wondering, confused me there. 25 strike on it, collected 88 cents for a 50-day hold. Here's the strangle, overstock. I put on the 105 call and the 50 call. The 50 put, I'm sorry. So I sold both the call and the put at the same time. Collected 141 bucks for 50 days there. So that's a pretty wide strangle there. So a strangle is when you sell the put and you sell the call at the same time. It doesn't have to be at the same time, but that happened to be the case at this point. And then another strangle I did was STX, which is Seagate. I did a 170 strike, so I sold the 100 call and I sold the 100 put, collected 97 bucks for those. That's another 50-dayer. Then TQQQ had a little down day, so I went out to December 17th to see what was out there, and there was a 50 strike out to December 17th for $1.01. So I sold 2 of those for 201 bucks. That's 113 days. I just like to throw those out there every once in a while when you have a down day. Way out 50 bucks because the stock price, was $141 when I sold it. And yes, it's triple leveraged, but kind of, I wish it would go down there and I could buy those at 50 bucks. That'd be nice. Then we got Rick Hospitality, 50 strike, 1 contract, 80 cents on that one, 49-day hold. SoFi. Oh, I did have an update on SoFi. Did I put it in here? Oh, there it is, 827. I don't know why I have that flip-flop there. Oh, I think I forgot to put the call in last week. So I got a call, 2 calls on SoFi. Ooh. Yeah, let me edit that for next week. We'll cover that again. I know I have a call. I know I have a call, but I think this is an 18 strike. I might be screwed up there. Oh well. But anyway, I did sell a put, and it was $12.50. Sold 1 contract for 52 cents for a 42-day hold. Big lots. I kind of went in this a little too early. It had a big drop after earnings, and that's how I like to play these. I don't like to have any contracts on during earnings. I like to wait till after earnings to figure out what the market's going to do. So they had a big drop. That's funny, big. They had a big drop, and then I thought, okay, I'll wait till the next day and put it on, and that's what I did. And the stock price was mid 50s when I put it on. Did 45-day DTE and did a 45 strike, got 80 cents. I think I can get like $1.20 something for it now, but it is what it is. I put in an order today to try to get a 42.50 strike added on, but my price didn't fill, so there's big lots. PFGC, that's Performance Food Group. I believe what it is. I sold a 40 strike on that. Just did 1 contract at 55 cents. This was my first time doing PFGC, so I kind of went light, see how it goes. And then here, which is Turtle Beach, which makes headphones for the gaming arena. I did a strike price of $25. Only sold 1 contract for 75 cents. And then JetBlue. I got out of American Airlines and I went over to JetBlue. JetBlue, I sold 2 contracts at a 14 strike. Collected 41 cents a piece on those. So the chart just looked better to me on JetBlue. That's how I got into JetBlue. American Airlines, after looking at the chart again, I wasn't comfortable where I wanted to be. There wasn't enough premium for me. So that's it. That's how all the options that I closed and opened. Let's look at the premium cooking now. So summarize last week, I closed 7 contracts for $339.25. But if we add the profit on the stock sale, is that right? I might have screwed this up again. Did I? Profit on the stock sale. Nope, I did. Okay, profit on the stock sale at $252. So a total net of $591.52 for the week. And then I opened 14 contracts for $1,092.05. So total premium cooking right now, $3,115.95. And that's pretty much split evenly between September and October right now. Now on the buying power used, this is the last 5 weeks. You can see the progression here. And right now, as of Tuesday, net liquidity is $87,900, which is the highest it's been in 5 weeks. I think I added about $1,000 here, somewhere in this time frame. Maintenance margin is $21,900. I got rid of those 300 shares of CVM, which helped. So it's got me scrambling. That's why I was able to put on so much premium this week. But I'm still only sitting at 25% buying power used. So you don't want to know. If you want to know how I calculate that, you take your maintenance margin, which is 21,900, and you divide that by your net liquidity, which is 87,900, and that brings up 24.9 or 25%. So I got room to put more stuff on, and I will. We got a 3-day weekend coming up. So this Friday, I'll probably be putting on a little extra to take advantage of the 3-day burn rate. Still working on trying to refine this. I got a lot of stuff going on behind the scenes. So, Google Sheets are not my strength. So it'll have to take some time. It'll take me some time to really refine what I'm trying to put here, because I really want to put this into a Google Sheet instead of the way I'm doing it here. But it's going to take some time because of all the other things I got going on. So that's all I got for you this week. Hope you enjoyed. Hope you guys had a good week, and hope you guys have a good next week. And we'll talk to you later. You guys have a good one. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.